Hello, this is Cryptolyze. I hope you are well this Saturday, November 11, 2023. We meet today to talk crypto, to talk BTC, to take stock of the week in which we had another very green week. Green on the macro, green on BTC. We are going to project ourselves where we are on the macro. What will happen in the following months? At least my vision. The same on BTC. We will also ask ourselves the question, are we really going to enter an altcoin season, given that we still have some big performances on Solana, on Taos, on certain cryptos, and that it will have to position ourselves yes or no? Are we in a bull run? Are we in a pre-bull run? Or are we simply in an upward acceleration, a rally? And we are going to ask ourselves the question, are we in denial? Because it is something that is important to decide. Are we in this very important denial phase in market cycles, or are we really in a pure rally phase in preparation for a bull run? As a reminder, you always have the possibility of having free access to the educational course, which is a 60-hour training worth €400, which allows you to learn blockchain, crypto, investment, analysis technique, trading, everything to become profitable. Through 130 videos, 400 pages of guides, quizzes to find out where you are in your progress, and all for free. To have access to this lifelong training, simply use the platform of one of our partners. Everything is explained in the comments and descriptions. We will begin our reflection with what happened on the S&P 500, in which we had another week which was rather positive. After this big week of acceleration, this enormous candle that we had at the end October, beginning of November, there we still find ourselves on a fairly strong candle, which is still much less. We are almost a third of the previous candle, so already showing us a sign of weakness. But we closed with a reduction in candles, which is rather positive. That means that we didn't leave a wick. So, technically, that already implies that we still have a little bit of force on it. And what is interesting to see is that we find ourselves exactly in this typology of pattern, in which we have a bearish acceleration, large impulse candle behind which closes above, with a candle which is a third of the previous one, and therefore we could expect a candle almost identical to this one if we took this approach. This approach implies that we would be in a form of retracement, of breathing the course, to then do a second, bearish leg, at the level of the bearish acceleration on the S&P 500, which would be correlated with a hardening at the level of rates, therefore not necessarily the interest rates of the Fed, but the 10-year rates in which we knows that we are already quite high. We are around 5%. We expected to have a form of breathing and descent over the 10 years below 5, to arrive below 4-5, or even perhaps a little less. But we see that it doesn't happen as simply as that. We have unemployment which is increasing, so we could have an end of year 2023, beginning of year 2024, therefore Q1 2024, which could be a little bit more complicated at the level of the S&P 500, and therefore the U.S. macro, which could lead to a tightening, and in any case behind a faster shift than expected by the Fed on the different elements, therefore which are the rates of the party, therefore setting up a small vote which would be quicker, therefore which would be rather positive on BTC and risky assets. Keep this in mind, we will come back to it. For me, technically, we are in a classic retracement zone. As a reminder, we are here in the 618, and what will be complicated is between 618 and 786. We know that here we still has a little bit of imbalance. We are in weekly. On the S&P 500 futures contracts, we see that we have an imbalance to fill, and there it is. The complicated zone when we are between 610 and 786. It is the zone of really very strong struggle, so we will have to see the reaction of the price. I think that there is a great possibility of having a wick like that. In any case, a weekly candle which could be carried out like that with a lot of indecision, with a big struggle. And we will see whether yes or no we are in a classic retest phase of a bearish continuity, or do we have a rupture, which could be consolidation, above 4,566, and which is for me the level to remember. So we're just going to put the next retest level, which should be here, which is a weekly retest level. So I'm just going to raise it a little bit here, which would also be the 4,500 really key level at the level of the S&P 500. If we never manage to break it or close above it, it risks being complicated. So for me, we will have the answer this week, therefore the week which arrives, and which is in same logical time. Because we would almost arrive at the last part of the month of November. We know very well that this is where we will have the end of the year, the bonuses which will be played out, the end of closing of positions. And so this is where we risk also having a lot of resistance and potentially one or two candles of this style before having a reduction in volatility. Next to it, we have the DXY. So the dollar against a basket of currencies in which we had a very good reaction in the support zone, we can clearly see that we are on the rise again. There we still have an indication with this closing which took place above the 105, where we risk having $1, which risks going to retest the 107 quite quickly. In any case, that's my reading of it. We also no longer have a form of wick-off accumulation that we are used to. We can clearly see we have the ST, the STB here, the spring bullish acceleration. What is that? That's an SOS. It's a sign of strength which is being put in place with a very nice retest, in fact, of the bullish breakout. So here we are, really in something which is rather clean. We could work again a little bit of this zone before having an acceleration, so we will have a dollar which would start to rise again. That would imply that here, if we have a dollar which starts to rise again before having a breath, that would mean that we will eventually retest here. The 110, 109, $110. And therefore that would mean that we have next to the bond rates which would continue to increase, hence the interest of the dollar compared to the rest, before have a breath. So there we would have a figure which would be carried out in two stages, with an accumulation here, a distribution here, for a redistribution to have a longer breath, and therefore a longer term. The tension is really in the long term. I'm talking about almost a year when we look at patterns. Like that weekly, it's really over the very long term. Same on the SP 500, we are in a dynamic which is rather positive with good news. We are bullish. For me, it's a vision which will be more over 6 months, 9 months, 12 months on a continuity. For me here, we are really in elements which will set the tone for the year 2024, for the general macroeconomy. Same at the level of oil, we see that we have swallowed this candle. I told you that we were entering the complicated threshold below 75, and therefore we have a nice reaction which is in the process of to be done. So for me, I strongly think that we will set up a big range which will be in this zone, therefore which will oscillate between the 75 and the 88, or even we could be a little wider. You could say between the 75 and the 85. Come on, 75 and 85, in which we still have a lot of resistance being carried out here. 82, so we could say 82 up to 75. For me, it could be a very big range which is set up between the two, so to watch in which we would have a delay of the oil, therefore implying a delay of the inflation, and therefore we would find ourselves in an inflation which would no longer be driven by precisely energy, so we could monitor inflation linked mainly to service, and this is what will also be monitored by the Fed. If we ever have a breathing space in terms of inflation, that means that we would have much fewer problems in making this important pivot zone at the level of the Fed more quickly than expected. If, in addition, we have problems at the level of equity, or at the level of tensions on the bond. And therefore that means that we would have free rein to have precisely a return of action from the Fed much more quickly than expected, because we would have inflation which would be maintained thanks to a rate at the oil level, which would rather be held with behind services which would also hold. Above, this is really the important element that we will have to monitor in the weeks to come, in the months to come, and even in the quarters to come. It is this 10-year level of American bonds. Really important as long as we don't break the level of 426, this very strong resistance level. At that point, we won't have a bearish approach. Even if we have a divergence, this bearish divergence can remain for a very long time. So we can oscillate here for 3 lead. And as long as we stay there, we have very strong pressure on the economy, the American economy. We are going to have tensions at the level of the American economy on the budgets which will arrive in the coming weeks. And that will really be the heart of the struggle of Q1 2024 for me and of Q2 2024. And that's where we will have a sign of relaxation. If we ever have breathing here that really takes place, at that moment we will have an anticipation of the breathing market and an equity, and alongside a return. Liquidity on everything that is active. Risk. Concretely, how is this characterized in terms of BTC? Already the BTC, we had another week which is rather positive. Again, with rumors and news around ETFs, it is always the narrative which pushes us very, very strongly. So as long as this narrative is not finished, we will still in fact have the capacity to be able to push. And how does this narrative end? In fact, there are 2 possibilities. It is generally no longer rumors, but news, real news, either acceptance or refusal, from the SEC at the ETF level. Do I think this will be refused? Absolutely not. Will it be accepted right away? No way. This week we have a kind of narrative that was put in place with it having to be validated between November 7th and 17th, November 9th and 17th. Excuse me. Anyway, are the 12 ETFs validated? And next to it, we have news from Bloomberg. two Bloomberg analysts who tell us that there is a 90% chance that it will be validated before January 10, 2024. So obviously we have an upward acceleration which is also driven by ETH, in which we have news from BlackRock on the filing of their spot ETF. So we really have all of this, which is in the process of put in place and which pushes the wedge upwards, and that there is no need to denigrate. We are in a bullish acceleration. We are in a bullish flow. That's all. We must take advantage of this flow. It's extremely important. We have a very beautiful flow. We accept it. Is this the start of the bull run? That's yet another question. Can we consider that a bullish acceleration driven by a set of rumors in which we await validation and news is the start of a bull run, in which we have a U.S. macro which is still in a form of instability? We have complexity in terms of regulation on all cryptos. In this ecosystem, we can consider that we are in a total bull run, namely that we have not yet passed the halving in terms of pure cycles. I tend to tell you that, for me, we have a pre-bull run and pre-halving phase, which is rather classic compared to what we have experienced historically. So I'm going to find, normally I have planned a little graph here in which we can clearly see in monthly, we don't necessarily have a lot of feedback compared to that, but we always have phases of acceleration too. So well, it's COVID, unfortunately. But I think that if we had not had COVID, we would have had something which would have been much more accelerated and delayed before the halving, and then a breathing at the level of the halving, exactly what happened also historically in 2016. So we would be a bit in this state where we have a form of effervescence upstream, a form of breathing afterwards, and then of upward acceleration once the halving is carried out, and therefore the implementation of the bull run. So for me, I remind you, for me, the start of the bull run would be Q23, QF4 2024. So we still have a little time. That still remains my perspective, as long as we haven't done any actual movements. And what would allow me to get away from this idea? So I'm not bear or bull. It's quite simply the vision I have of the general macroeconomy plus BTC, and the experience I have of having lived through different cycles in which, for me, we are really classically in a buy the rumor, sell the news. That doesn't mean you have to go short. Certainly not. This means that we benefit from the upward acceleration, while taking into consideration that when we have the news that will arrive, we risk having a retracement. So, do the zones that I gave here still hold? In particular, the reload zones 2? Do I still count them? I want to tell you, given the bullish acceleration that we have there, the new zones really to hold, I think that we will have a retest of 31,000, 32,000 for me. It is a rather classic form. Even if we will continue to look for the 41,420, we will have an effective retest. I don't think that the 35,000 hold up for me. I have a hard time thinking that the 35,000 want to see if we have a form of consolidation before, if we have something that takes place like that. We have work at the level of 35,000 before having the second upward acceleration. I will see this zone again as being a potential support. For me at the moment, there is not enough volume. There it is not sufficient, so it will in fact pierce the 35,000, and it will certainly seek out the 32,000. Can we go get the 24,000, 25,000? Yes, clearly for me it still remains a retest zone, which could be quite classic because we have a lot of liquidity which is in this zone here, in which we could have a wick to go and find this zone before to be able to structure upwards and start accelerating again. For me, I will still keep the reload zones and the reload zones too, because I keep them, they are levels which are very important. For me, the probability is very low, but I keep them anyway because I like to be prepared if anything happens. I always have these areas ready in my head. For me, that's a bit of the idea. After once again, you don't have to be in a hurry. I'm not saying it's going to happen tomorrow. I'm keeping my outlook for another year to myself. A little complicated at the level of cryptos in which we will have phases of regulation which risk returning. I remind you that we still have a phase of legislation which is arriving at the level of the USA. We will also have the whole presidential part which will arrive at the level of the USA, which risks playing a huge role, which could be for me the real trigger for the bull run. So we actually have these parts where I tell myself that I still have 12 months in which, well, in these 12 months we can do many, many things. That is to say that we can have such a very strong acceleration, we can have a delay, we can have a lateralization, we can have a retracement on the 35,000, on the 32,000, on why not the 25,000. And besides, the idea is not to try to guess what will happen. It is rather to be prepared for what may happen. And personally, I am taking advantage of this acceleration. These are things in which we have a lot of grid bots that have been given, in which it is excessively profitable, in which we have positions which are really profitable, in which we systematically raise the stops. loss in the different zones. So there we really have something in which we benefit. We did a big accumulation phase in the spot part. We prepared for the future part, so we are pretty good. The only thing is that we are also preparing for Oka, quite simply, from buy the rumor, sell the news. What will happen if it is ever validated? At that time, the period of invalidation of the effective retests would really be to have the news arriving and to have rockets going off. If we do not have a retracement at the time of validation, therefore the week after validation, then it is possible that we have a form of very strong FOMO which arrives at the time of validation with a candle which bursts and which swallows again the following week. If we do not have that, in this case, in fact, we will be at the start of a bull run, and therefore, on the other hand, that means that we will be gone completely. In any case, if we've left completely, it's not a problem because we're already ready. If you are here on the channel and you have experienced this whole part with me, I think that you are all already ready, and that you are all already full, and that, in any case, emotionally. Are you ready? On the other hand, those who are not ready are those who are FOMO here. So, on that, there will be a video tomorrow, really, on the notion of FOMO, because I have some interventions which are in the comments, which are in the Discord, in which I will use them to make a little minute psychology to fully understand why you feel this way, how to manage this part, and above all, the mistakes it can make you make when you are psychologically affected at this point. You will see that it is very important. In any case, what is certain is that if you have continually waited for us to systematically retest lower, and you have never bought this one, that you have never bought here because you think that it was in tank, that you never bought here, well, unfortunately, it will be complicated for you because in all cases, you are in a schema where you are really in a pure false word, and that you say, well, I never bought. Well, the problem is that you have to manage your exposure and always accept the fact that potentially the market does what it wants, and if it wants to leave, it's gone and you always have to be on the train, whatever. That it happens, it's called risk management, the management of one's exposure. That I think we have covered it in length, in breadth, across, on the chain, continuously, and in the daily newspaper. So we're going to come back a little more to small, quick points. So for me, we are in this acceleration phase. We still have the RSI, which is pulling a little with a divergence, which is in the process of being put in place. Well, that we can attract the divergence for a very long time. So for me, it is not a real signal. We accompany in any case, in all cases, the flow which is taking place. The other point I wanted to give you is a form of relationship between the dominance of BTC, altcoins, and Ethereum. The altcoins are Total 3 minus USDC, USDT, and DAI, which are the stable coins which in fact allow you to simply have all the altcoins. So a maximalist BTC and a maximalist Ethereum would say the shitcoins. The light blue, it is the representation of everything that is not Ethereum, BTC, and stablecoin. We have Ethereum in yellow, therefore the dominance of Ethereum. And then we have the classic dominance of BTC. So what is interesting is that normally in the cycles we are supposed to have something quite classic, that is to say acceleration of BTC, acceleration of Ethereum, acceleration of altcoins. Okay, with BTC, which lateralizes, during this lateralization it is Ethereum which pushes and then so on. This is not at all the case. It is very interesting to analyze it where we have a very strong valuation of BTC which is taking place. Then we have a very strong valuation of all altcoins, or BTC, and then it was Ethereum which began to gain value. So okay, the Ethereum peak here is clearly the news linked to BlackRock. The filing of BlackRock's spot ETF, it's to show you to what extent the news of the potential validation of ETFs plays a huge role here. We are in the process of preparing that. We are in the process of preparing this part. And that is why I am telling you that there we still have a form of decorrelation which is taking place. On this, we take a little step back. We do not have enough temporality, fractality to say that we have statistics which are more or less sufficient to determine a reality. We are still relatively in that, but we still have a pattern which is different from the rest and which makes us ask questions. Yes or no, are we at the start of an alt season or not, or are we in a purely emotional reaction which is taking place with accelerations? Bullish, which are driven by inflows of liquidity on the possibility of validation, because once again it is the validation of BTC, of Ethereum. There is no reason that the altcoins are currently pushing, especially as there is no real lateralization of BTC. So we're in a dynamic that's a little bit different, and that's why I'm telling you that I don't think we're really yet in this very strong bull run game. I think we're more in a valuation part of the market. So we are in the process of finishing the bear market. We have finished the lateralization. We are simply preparing what? Well, the halving and the bull run, we are in a pre-bull run phase, which is rather positive. And I think that we will again see buying zones which will be interesting. Will we see the best shopping areas again? Will we see the 15,000 again? I want to tell you, we don't want to see the 15,000 again, okay? We really don't want to. We don't want to see 20,000 again because that means that we're breaking the whole structure that we have, and therefore that also means that we're going to have something emotionally that risks be very complicated, and to get to these areas it means that we will have such strong endogenous problems that we do not want to endure them. I don't want to go through an FTX again. I don't want to go through a Terra Luna again. I don't want to go through a ban. General use of blockchains and e-crypto in the US. There you have it. These are things that I don't want to experience. And so for my part, I tend to tell you that you don't want to live and have to endure a 15,000 or a 2-0. Take a step back. Just taking a step back, I would like to end this video on two things. One thing is, when we take a little step back from the liquidity at the BTC level by looking at 1 year, we still have a lot of liquidity which are found. Yes, there is 15,000, but in reality we see that it is something which simply remains coherent in relation to the upward acceleration. We have never come to look for them. There is little probability that we go get them. On the other hand, we have a lot more liquidity which is found here at the level of 2-0 and a lot of liquidity which is found at the level of 34,000. And in general, I think that we are going to have a strengthening of liquidity in the long term which will be done at the level of 30-32. I think that we can clearly see that it is being rebuilt. I think that we are going to have a reconstruction that will take place, with potentially a retest of this area. But we will deal with that in any case in the daily newspapers as we go along. We are taking a step back. Why? Because when we look at Ethereum, we see that it is still much sexier in terms of liquidity. We have Ethereum, which is telling us that potentially the champagne cork could burst if we make a break. Real of this high in which we could have an upward acceleration because we have quite little equity to fetch at the bottom. Okay, we have something. We went to look for the very strong short equity that there was on this retest. For the moment, we are pretty good. We risk having a breather. But so at this moment, we could have a transfer of equity, which could take place on Ethereum rather than on BTC. To be continued. Because once again, what are we linked to? Well, linked to the news from BlackRock, because it is BlackRock which makes us move, whether we want it or not. Unfortunately, we are currently controlled by the giant BlackRock. I really invite you to note 8:30 tomorrow. I'm making a really special video for you on the psychology part, in which we're going to come back to the notion of FOMO and how to manage precisely these accelerations. Manage a potential retracement, because that's going to be very complicated. Because we are buying. And are you exposed enough or not enough? We will come back to this whole part. And how can we manage what might happen next? You will see that it is very important and has a huge impact whether you think it or not. In any case, it's something that can be seen a lot on my part too, because through the Discord or through the comments, I clearly see the typology of people that is changing, the types of reactions that we say that in all cases we will not see a token again, finally a BTC at 35,000, that we will not see a BTC again at 30,000. And these are in fact forms of certainty in which we try to self-reassure, and in which we also try to manipulate others a little to create precisely this feeling of FOMO. And it is imperative to protect yourself, for your capital, and for the future. And in the meantime, if you like this video, don't forget to leave me a like and a comment. It always makes me very happy, and we'll see you tomorrow.